Welcome to last week's roundup of the latest happenings in India's startup ecosystem from the School of Management and Innovation. Whether you're an entrepreneur, investor, management student, or simply someone who enjoys keeping up with innovation, this video will quickly bring you up to speed on the most important developments from the last week across IPOs, funding updates, ecosystem initiatives, and emerging trends. Our goal is to help you stay informed without spending hours scanning news yourself. We'll also extract key management lessons from each story, so you walk away not just knowing what happened, but what you can learn from it. So, let's dive right in. Lenskart IPO makes muted market debut, raises valuation discipline questions. Lenskart made its market debut with strong subscription but a muted listing. Priced at Rs 402 per share, the stock slipped 11% to Rs 356 before rebounding near Rs 392, valuing the firm at US $7.7 billion. Despite 28 times oversubscription, analysts flagged its 238 times PE valuation as stretched. The debut highlights tension between startup hype and public market discipline. Investors admire growth stories but demand evidence of profitability, unit economics, and competitive durability. So, what are the management lessons that we can get from it? 1. Valuations must reflect fundamentals. Public markets reward sustainable metrics over hype. Lenskart's muted debut shows that public investors apply a stricter lens than VCs. Private valuations reward potential, but public ones demand profitability, visibility, unit economic strength, efficiency, cash flow stability, and defensibility. The key questions which emerge are: does growth justify valuation? Can profitability scale without margin loss? How resilient is the moat? Public markets correct inflated pricing by linking value to real performance. Founders preparing for IPO must tighten economics, prove profit pathways, and clearly articulate business logic. When fundamentals match narrative, valuation becomes sustainable. The second key management lesson that we can derive from it is that brand plus operations equals a moat. Owning supply and customer journey builds defensibility. Lenskart's strength lies in vertical integration, owning design, manufacturing, retail, and service. This reduces dependency, lowers cost, and ensures quality consistency. The approach reinforces its brand promise of affordable, high quality eyewear with smooth omni-channel experiences. Operational control creates cost efficiency. Strong brand and customer experience drive trust, loyalty, and lower acquisition cost. Together, they form a durable competitive moat that is hard to replicate. In short, operational ownership leads to efficiency and quality. Brand and customer experience leads to loyalty and trust. And together, it leads to a sustainable, defensible advantage. Precisely what public investors value the most. InCred Holdings confidentially files IPO papers with SEBI. InCred Holdings, parent of the NBFC InCred Financial Services, has confidentially filed a draft red herring prospectus with SEBI, aiming to raise 3,000 to 4,000 crores. The funds will support its lending operations and growth. InCred has disbursed over 25,000 crores in loans and managed assets worth 12,500 crores as of financial year 2025. The confidential route reflects how fintechs now use flexible IPO pathways to time markets and enhance readiness. Management lessons: 1. Right timing matters, as strategic sequencing of fundraising can reduce risk. A confidential DRHP lets InCred choose optimal timing for its IPO based on market sentiment and economic conditions. This flexibility reduces pricier risk, listing day volatility, and valuation uncertainty. Given fluctuating appetites for fintech IPOs, InCred's phased approach, that is scaling privately, filing discreetly, and proceeding when conditions align, ensures strong market reception. Lesson: smart sequencing preserves value and credibility by launching only when investor demand, financial maturity, and macro stability converge. 2. Scale requires process discipline. As a growing NBFC, InCred's success depends less on rapid expansion and more on risk and governance discipline. Lending firms face strict regulations and asset quality scrutiny. Process becomes the true moat. Sustaining performance requires robust underwriting, strong compliance, and predictable portfolio outcomes. Firms ignoring controls or governance risk losing asset quality and valuation strength. Lesson: for lenders, scale is equal to system maturity. Demonstrating healthy NPAs, disciplined risk management, and transparent reporting builds investor trust pre-IPO. Weekly startup funding: 20 plus deals, $240 million raised. Indian startup closed around $240 million across early and growth stage deals. There was visible traction in AI, SaaS, and Spacetech. Although smaller than previous week, the numbers signal continued investor appetite, but with more scrutiny around path to scale. Seed and early stage rounds dominated 17 out of 24 deals, with notable traction in AI, where 6 startups raised $67.6 million. The dip highlights that while the ecosystem remains active, investor discretion has increased and mega deals are fewer. This signals maturation. Startups now must demonstrate clarity of path, not just hype. Management lessons: 1. Capital is selective, not absent. PMF, revenue clarity, and discipline matter more than narrative. As capital tightens, investors back startups with product market fit. Clear demand, strong retention, predictable revenue, low churn, and scalable logic. Funding hasn't vanished. It's shifting towards companies showing measurable tractions, not mere storytelling. PMF means a product effectively solves a real problem for a defined customer base. People buy, return, and recommend it. In essence, startups that prove authentic market need and sound unit economics continue to attract capital. Those built on hype struggle to raise. 2. Sector waves emerge. Track rising verticals like AI and Spacetech for new opportunities. Startup growth happens in sector waves driven by tech breakthroughs, policy support, customer shifts, and infrastructure maturity. Currently, AI and Spacetech lead India's wave, backed by funding, government incentives, and specialized talent demand. These sectors open new opportunities for ventures, investors, and learners. So, why does it matter? Early movers win, so entering early builds category leadership. Capital follows waves, so investors prioritize emerging sector. Talent clusters. These growth sectors attract skilled ecosystems. Learn early. Management students can upskill in AI or space tech roles to stay future ready. In other startup news, Kerala Startup Mission launches Cheque Mate to connect founders and investors. Kerala Startup Mission is staging Cheque Mate at the Startup Festival Huddle Global 2025 to be held at Kovalam December 11th to 13th, offering curated one-on-one meetings between pre-selected startups across sectors like deep tech, health tech, agri-tech, fintech, mobility, and high net worth individuals, NRIs, angels, and MSMEs. The program emphasizes full startup validation prior to investor engagement and aims to position Kerala as a globally oriented tech ecosystem beyond metro hubs. It indicates a shift towards structured investor startup matchmaking rather than purely open pitch formats. SNDT Women's University launches Innovation Mahakumbh 2025, promoting women led startups. At the Juhu campus of SNDT Women's University in Mumbai, a national innovation conclave titled Innovation Mahakumbh 2025 was inaugurated by Maharashtra's CM Devendra Fadnavis. The event showcased over 150 women led startup ideas and student prototypes in medicine, agriculture, transport management, and smart hardware. And the university's new pre incubation center was also launched. This reflects rising participation of women in India's startup ecosystem and a growing academic industry pipeline. InSpace plus SIDBI launch a 1,000 crore VC fund for space startups. The government-backed fund aims to fuel India's fast-rising new space ecosystem, supporting companies building launch services, EU technologies, satellite applications, and deep tech infrastructure. It signals structural intent to make India globally competitive. Kenko Life raises seed funding. The Kenko Life, a health-first food company, has raised seed funding to strengthen its foundation and fuel its next phase of growth. The round was led by RainMatter, Zerodha's health-focused investment fund. The startup claims to be clocking 300% year-on-year top-line growth. Think Investments invests in Physics Wallah. Global investment firm Think Investment has invested a little over 136 crores in edtech unicorn Physics Wallah as a part of a pre-IPO funding round. As part of the transaction, Think Investments picked up 1.07 crore equity shares amounting to 0.37% stake in Physics Wallah from 14 employees of the edtech firm. Those were some of the biggest developments shaping India's startup ecosystem this week. From funding updates to IPO buzz to emerging sectors like AI and Spacetech, the landscape is evolving faster than ever. If you found this roundup useful, don't forget to like the video, share it with your fellow startup enthusiasts, and subscribe to the channel for more weekly insights. Your support helps us bring you sharper, faster updates on what's happening across India's innovation economy. Join us again next week for another quick summary of the stories that matter most in the world of startups.